Okay, folks, let's spend a bit of time tonight talking about strategy. Now, I made some adjustments to positions today early on. I added more to the short side on the spike up. As we began to top out and begin to pull back, I took off some of the hedges. And the reason for that was a couple of fold. I'll bring you to the cues last night. And last night, when I was going over this chart, I was mentioning either we're going to break down here on Stokes, proceed down to 20, or we're going to hold and we're going to hook up. Now, I wasn't surprised by the spike up this morning in the market. So the play was that if we close strong, then I needed to lighten up on shorts because I could think whatever I want that the market's going to do, but when the market tells me I'm wrong, I'd prefer to take that hint early on. And if it results in a loss, it results in a loss. At least we have our capital reserves so that we can re-enter positions at a better risk reward entry point. That's the name of the game. It's not about making money first. It's about preservation of capital. So this chart here had a lot to do with my mindset going into the new trading day. Now, what else added to my mindset? What else caused me to do what I did? Well, first off, if we close strong on the day after a big spike up on NVDA this morning, NVIDIA, well, I would take a small loss, take half of that position off the table, and move to the sidelines, raise capital, because I was wrong. We did not get the fade or the reversal that I would have been looking for had we closed strong, and we did. But what precipitated me to take hedges off, besides the fact that I wouldn't have been the least bit surprised to see a spike up and then a bearish reversal day and a down day, new daily lower lows, given that this economy is in turmoil. Well, let's take a look. I always have my eye on the headlines. This came out late in the day. Apple delays bonuses and implements a hiring freeze. Okay, take that bit of information, put that in the back of your head, store it for a time where it's worth it. We'll come back to this in a moment. Kremlin blames U.S. crashed drone flying off the Russian border. So we had a near kinetic event. I guess you could argue it was a kinetic event over in the Black Sea. This was at 3:10 p.m. Apple reported layoffs at 3:45. This was the big kahuna. This came out earlier in the day. And Moody's downgraded U.S. banks. They're saying now negative. No, this is a downgrade from neutral to negative on the U.S. banks. This says it was released 2 hours ago. This was released on Zero Hedge much earlier in the day. Really no reaction by the market. No reaction by the market to the kinetic event or pseudo-kinetic event over in the Black Sea. No reaction by the markets to the layoffs out of Apple. No follow-through on SVB to the downside. And then I read this early on. And this is what really got me. Because we didn't go down on Moody's downgrading. And then I read this. Another scandal. Biden administration radicals blocked SVB sale. They nationalized it. They preferred to nationalize SVB rather than put it up for sale. So they opted to use taxpayer funds rather than the quote unquote, whatever remains of the free market. So all these headlines in the back of my mind, and you may be wondering what was wrong with me during the final half hour of trade. This was all in my mind, and I'm watching the price action. I'm looking for a reaction by the market, maybe a last minute dump by the market. Wasn't happening. Equities were gaining strength. So what does that mean? In all probability, we are going up. Doesn't mean I like it. Doesn't mean I agree that we should, but they are going to print. Now, the inflation numbers came out earlier today. They were on par with what was expected. I thought that would have been enough to send equities lower. But all this being said, what's becoming more and more clear is that They are betting on the Federal Reserve to be accommodative, to start up the printing presses yet again. Until we get the next Fed meeting and the next press conference, everything else is conversation. In all probability, they are going to drive this market up higher because that has been the path of least resistance for 15 years. And traders and institutions in particular are dying for those days to come back. The however is, I don't think that we're going to get the same bang for our buck. It's like pushing on a string. Now, the chart I want to show you next is another piece of data that reminded me of what happens post events such as this. You get a counter trend rally, you get a big move. This is the Bear Stearns bounce going back to 2008. Ultimately, this got resolved to the downside. But were you short and shorting aggressively back here when Bear Stearns went under, well, you would have had your face ripped off. So we could ignore the tells, the quote-unquote tells of the market, meaning what should have been news today that should have brought the market down further. Moody's downgraded the banks, kinetic event in the Black Sea, and Apple laying off thousands of employees. And in fact, Meta announced another 10,000 layoffs as well. The final nail in the coffin was this. This is a headline, and looking at this, I'm kind of glad that we did what we did, and that was lighten up on shorts. Cathie Wood's ARK recorded largest inflows in years as SVB collapsed. So money, whether it was the fact that investors thought that the Federal Reserve was going to start the printing presses, or they just thought it was a safer home to be in an ARK fund than in a savings and loan bank or a regional bank, I don't know. But $397 million in inflows was the largest in years. Here's a chart. So this money's got to get put to work. And you could bet that if ARK funds saw these inflows, so did a lot of other mutual funds, that money needs to get put to work. So my guess is that the most speculative of the speculative names are going to ramp up higher along with the money center banks, because they are the greatest beneficiary of the flight of capital out of the regional banks. So let's get to it. Let's go to the charts. I know we're going to run long here tonight. Sorry about that. I just wanted to make it clear where my head was at, and hopefully I articulated it well. And if I didn't, please, if you have a question, leave a message in the forum. 10-year yield pulled back. No great shock that this was going to happen. Excuse me. Rally today. Bonds pulled back. No great shock this is going to happen. The past couple of days, we had seen the biggest drop since the stock market crash of 1987. TLT pulled back. No great shock. How was volume here? Big volume. Tips pulled back. How was volume? Pretty high. The US dollar up but faded on the day. Stokes weak, trading down below 50. Rallies tend to fade. Be careful. The VIX. A chart that I was watching all day long. It did launch a counter trend late morning, early afternoon rally. Took equities down, but ultimately that rally faded and equities bounced back. That's a tell. Transports closed down on the day outside reversal bar. This is pretty bearish stuff, but we're holding 13,800. Volume was very heavy. The Dow Jones eked out a gain on the day. Shouldn't say eked. It rose by 1%. 32,250 resistance. I'm not bullish on this chart at all. Volume was good. Spiders, again, I'm not bullish on this simply because it closed up. Simply because the Stokes look good does not make me bullish on it. Would I put capital to work here? Probably not. I don't like the setup. I think that this is a hopium trade. Maybe it'll play out, meaning that the bet will be Fed Chair Powell will need to pause on rate hikes start at the printing presses and all is right with the world again. But we know when that pivot begins, it's only a countdown to the next leg down in this market. We have learned that through the yield curve relative to the S&P 500. The trip Qs. We went over this already. It's worth going over again. I spoke about this last night. Remember, the stochastics are momentum indicators. And I love when they're declining down below 50 and to be short. When they put in a higher low and they hook back up, all of a sudden, I'm not that bearish anymore. I get really sketchy. I get really, really nervous. Now, had we rallied up and into 295 and reversed to close down below support, I would have added to shorts here. It didn't. Simple as that. It didn't. Therefore, I'm wrong. RSI rising, Stokes rising, volume strong, MACD getting ready to go positive. I think they're going to pop this higher. And we're going to need to close out shorts. And that's fine. Small losses sets us up for a better risk-reward re-entry point in the future to fight this. If, in fact, I'm right and we do break out here, it's insanity. IWM. An up day, but a fade. You know, does this really look like a nearly 2% move that you would want to buy? I would argue no. Volume, good. The banks caught a bid and bounced, and that's really what got things started today. XLK rose, another higher low on Stokes. Staples moved up higher, bullish key reversal bar, good price action here, up nearly a percentage point on volume. XLY closed right at resistance. Indicators moving up. DBA, food prices, stable, a little bit oversold. Energy. Now, this is a potential short. Energy is breaking down. You know, despite the fact we had to bounce back today, couldn't close back above support. Volume, very heavy, but a lot of this was selling. Let's check out the close. See how it looks. 30-minute chart. It looks like we're going to probably rally. I wouldn't short it here. Oil. A really big move lower on the week, down nearly 7%. This is a sign, along with the transports, that this economy is messed up and it's going to get worse. Daily chart of oil. We broke that rounding top. This is very, very bearish. Gold closed down on the day slightly. Closed right at support, a little bit below it actually. So gold holding gains by and large. Nugget closed up, closed at resistance. Volume was very light. GDXJ closed up another percentage point. Volume drifted off. Silver, bearish reversal bar, but held the 200 period moving average. Silver miners, daily view. Very close to a breakout. If we close above 1020, we would consider that a breakout. Gold money, flat. Uranium, down 1%, nearly. LABU up 25 cents. Let's look for a higher low here if we get a pullback. Stokes look really, really good. Emerging markets, down on the session. No new daily low, though. Perhaps they're bottoming out a bit. Tesla, let's talk about this. Okay, so the technical reason why I took the put side off, where we had a profit, was that I was looking at the Stokes, and we tapped the upper band of resistance. I pulled the profits off the table on the naked, or it's technically a naked put, but the put side of the strangle. Now, the play was I was hoping for a reversal bar or at least a close down below 180. Now, that didn't happen. I think we're going to retest 180 tomorrow. Let's go to an intraday view because I know that Franklin is definitely in this trade. So I want to talk about it a bit more. 4-hour chart. We have a little bit of overhead supply here. Let's play with this a little bit, because what I will do is that if we continue to move up higher, it doesn't make any sense not to have a put side of the straddle on. So I would look to reopen that put side and just try to generate some cash flow. And this will just be a time decay play. So I'm not opposed to reopening the put side, given the fact that we closed strong. Now, if we would have closed weak, I would have just stayed with the naked calls and been short of Tesla. Didn't happen. 30-minute chart. This is going higher. All right, and as for NVIDIA, we are completely out of this short trade. It held above support. It rallied into the close. I'm going to go back to my old default position. I'm going to be looking at 250 to 260 on NVIDIA. And I'll be looking to short into that resistance level. And that's it, folks. Everybody have a great night, and I will talk to you tomorrow. Be well.